you 6th of September 2021. Today is a Monday. US non-farm payroll was really bad, as we all saw. But is the market happy with it? Now that's the interesting thing here. The number was very bad. Okay, it was way below the target level. All right, way below. Okay, and what causes it? Obviously, itself that with a lot of jobs will not no more, which is logistics side, the hotel side, with the waiter and waitress side. That was what happened. Okay. And before we start this morning, again, this is why I want to share a little cute, interesting cartoon with you. Our CEO wants to promote you to chief economist because nothing you say makes sense. He thinks that that's a sign of a great economist. Oh my God, it totally is. Say something smart. Whoa! I don't want to create an oversupply of wisdom. All right, a lot of economists on last Friday were very positive that numbers will be good. All right, they were all looking at numbers to be at least about 600,000 to 1 million jobs. But what we saw on last Friday was really a shocker. Less than 300,000 jobs was created. So the question is, how come the whole world can miss out such a big number? It's no farm payroll. Well, I'll look at it from two angles. One is that they really didn't know that things is so bad right now in the market, or it's because that they actually purposely do it. So what do you think, guys? What do you think that causes the market to be that bad? Okay, write in now in the comment box, all right? So this is whereby I think that we have to understand that this is how the financial market really works. Because end of the day is that can't be one person. If one person get it wrong, I can understand. Two person get it wrong, I can still buy it. When you have more than 10, 20, 30 people getting it all wrong, right? Sometime in life, you don't really understand how does this financial market really works. All right, so before we start this, more of a disclaimer as usual, to understand this, whatever I share should be just a learning aid. And most important, you should accept the above and identify me. All right, thank you. Now, let's let you know that, right, we are having more and more people subscribing to the TWB alternate market views. You can see right now, this is what I share. I share this chart is drawn by myself, and I tell you that this is what happened to the bonds, the 10-year yields back then with the bonds market, and I tell you that how does the yield and the bonds work in a way. This is like all the extra stuff that you don't really see on mainstream media. And also tell you that what I'm suspecting will happen likely on the 9th of September during the ECB Governing Council of European Central Bank held in Frankfurt. And I'll tell you about my big index. What do I see now? I talk about how Michael Burry, Ray Dalio, John Ponson, and this Bill Gross, they're all doing. So you see that the information here and the details here is a bit different. And basically quite a bit of people are watching and reading this. So you can see that, right? Yeah. So if you're interested, just contact Susan. All right. This is open for both students and open to public too. Okay. Now, of course, our Hang Seng M1 trading program has got a lot of attention. As you can see right now that just 2 weeks ago we have about 5 members. Then it blossomed to 26 members last 2 weeks ago. Then after that, today now we have 53 members. Wow, it's a complete 100% jump. And of course, they are very happy with that because we give them very prompt sharing recap of the Hang Seng. And also, of course, people traded and they make money. That's the most important thing. So that's why if you're interested to be part of this M1 Hang Seng Index M1 trading, you just have to contact King Hua. He will assist you and tell you the SOP or what you need to go through to get yourself inside here. Okay, it's absolutely free. It's just that you will prefer to have the index, the Hang Seng Index indicator with you. All right, prefer. When we say we prefer means that, right, of course, you need to have the indicator to see the market. All right, if you don't want to subscribe because of whatever reason, then you'll be putting yourself in a dangerous position. But you can still join us without the indicator. All right, that's going to be very tough for you. Okay, all right. Okay, so what we have is that we saw the very terrible number. The market was expecting 750,000 jobs, but the number came out to be 235. And you can see that if history was a good guidance, you can see from May, June, July, August, I mean the so-called the data from the last few months, it was supposed to be all the way up from 250,000 to even 1 million job. All right, that was what happened. But it was really a shocker when the thing came down like this, okay? Like this, wow, it really came down like this. So it was a rude shock. And of course, what happened itself, right? Whenever you have this happening, the market will react. I haven't had a time today to really check who won that thing. Sorry, it's too early in the morning. So I apologize on that. So I'll get back to you who won it. But I think 235,000. I think on the flash, I think I did saw someone posting somewhere near this figure. So I think someone have won it. I'll cover this tomorrow. Okay, but that is what's happening right now. Okay, so let me just this is what's happening. And wait, let me just forgot to put today's one. Sorry, everything is so rushed this morning. I kind of like not ready yet. Well, I'm just gonna give me a short moment while I prepare for today's one. Okay. 1 minute, just give me a short moment. Apology. Yeah. Today we were a very long day outside. So that's why we don't have much time to prepare. We need to do all this thing. Okay. All right, since today I just checked the data. Today there's nothing today. In fact, today there's nothing. Only until Wednesday, then we have some data coming in. Let me just show it to you live right now. 1 minute. Yeah, here we go. Now, where I get my data is from investing.com. You can see on our screen that there is nothing available until Wednesday, right? Until Wednesday, we have the jobs opening. Then Thursday, we have the initial jobless claim, crude oil, and PPI data, which is going to be the inflation data. This is the one that many people watching that. So that will be the one that everybody eyes will be on coming toward this entire week. Okay, all right. So today, no data much. Today, no data. All right. First data we want Wednesday. Big data, big data. Okay. All right. So let's just cover what happened on Friday's US market. The Dow Jones initially went down first, then it recovers back above opening price, went down again, then eventually stayed flat for quite a few hours. Then the last 15 minutes, there was some profit taking, but it was no real pain. Because think about this, if the normal time when the US non-farm payroll is like 233,000 job when it's expecting like 700,000, straight away, wow, the Dow have crashed, but not this time because the market is still very happy with this data because now with the non-farm payroll so bad, right, there's a very low chance that US Federal Reserve will actually do any form of tapering. And if there's no taper, means more money will be put in the system, hence, therefore, the market will still be positive. But on the flip note itself, right, because job data is so bad, there'll be question again whether is the US economy doing that well. If the US economy is really not doing that well, there'll be some jittery. Some people may take profit along the way. So that is something to watch out for. All right, so let's just look through the morning Dow Jones, the US market recap. So first of all, the US market retreated on Friday. S&P slipped from the record high after the August data came out. There was showing that the impact of the Delta-fueled COVID resurgence. Okay, the Dow is down by 74 points, S&P dropped by 0.03, almost negligent. And of course, the NASDAQ actually went up. Okay, why? Because tapering, if there's no more tapering, or taper is no longer on the table, at least for now, the NASDAQ will be the one that can benefit. Yeah, because technology counters, it doesn't want taper, it doesn't want interest rate. So when this thing came out, right, it actually benefit the NASDAQ technology counters, and that's why you can see the NASDAQ actually stay positive. Okay. So you can see from there, economists, okay, was all looking at about 720,000 jobs, but yet the data was 235,000. It's really like 1/3 of their expectation. It's really 1/3. It's not even like it's not a miss. It's not like a oops miss, but it's a really, really big miss. It's really very incredible. So we heard from Jerome Powell the last time during the Jackson Hole Symposium. He already said and emphasized that the need for more stronger job data will be very important for them to look at any form of this QE tapering. So now with this data so bad, all right, it will change. It will definitely change the whole entire movement. So now definitely traders are looking at, well, most likely the Federal Reserve will pause and push their plan to announce tapering later. So more and more people are thinking that way, and it makes a lot of sense. And then, of course, if the federal push back the tapering, it may increase accommodation, but it will also increase inflation, and it will actually lead to stagflation if the economy is not recovering. So later on, I'll show you an article whereby it said that this is going towards stagflation, and I totally believe in that. So that's the reason why, personally, I think that commodity prices in the later part of this year will be running up pretty strongly. Meaning, because inflation usually will propel commodity prices higher, and that's what I believe that will likely be happening in the late part of this year. Okay, so let's just do a quick recap of what happened on Friday. All right, first of all, you can see that Friday, okay, let me bring up the drawing. Oh, thank you very much. Good morning to you, Iman, good to see you. Okay, so what happened in the morning is on Dow Jones on Friday, the Dow opened around the above pivot 1. But because the KSI is red in color, we all know that. So therefore, when the market goes up, the upside will be around KTR plus 1. Okay, the upside will be KTR plus 1. And if the market goes down below pivot 1, that's what we know, then the market will go down to KTR minus 1 rather easily because the KSI is red in color. The KSI is red in color. And of course, what happened, you can see on Friday, well, the market was just basically ding-donging above the OP. Then suddenly we see a very massive BMV coming out of the market because of non-farm payroll data. But the thing is that when the data came out, right, you can see the way it stopped beautifully at the pivot 1. Look at it. Look at the way it closed. It went through pivot 1, but the way it closes was really incredible. It's like as if that there's someone knowing the pivot 1 exists. And then after that, it recovers. But of course, the recovery was not strong enough. And then the market sells down again below the pivot 1 and causes selling all the way down to KTR minus 1, which is what we have said earlier itself. And once it hit the minus 1, you notice that there's a KCB level at 35,310. Now, yesterday, on last Friday, I remember I tell you guys, right, there is a very important technical level at 35,310, which also happened to be nearby the MA30 level. Remember the MA30 level that I talked about? Remember? And then what happened? The market hits the MA30 level, hits the KCB, and then recover. Look at it, it recovered almost like 100 points all the way up itself. So if you remember that, all right, just key to REM for those who are online with me right now. All right, good morning to all of you. All right, remember that I said that there's this MA30 level that I watched on the Dow Jones, and indeed the market touched there and immediately rebounded. Oh my goodness, that was really, really insane. All right, so that is the power of MA30. Okay, now for gold price was outright. Now gold price, I already tell you guys, gold price likely be going up soon because you can see the consolidation around here. And then after that, one push up. Can you see that? So same thing again, it was consolidation, also four candles. And then after that, it push up. So will we see a pullback like this? I'm not too sure. It is all possible. But if the market failed to go down, it'll be going up very soon. I'll tell you more. Because the KSI is green in color and there's no blue bars at the bottom, definitely it's more for upside, right? So that's why when gold opens here, it couldn't stay down. And because KSI is green, so we know that if the market breaks above pivot 1, it'll be a buy. And we all know that above OP, above pivot 1 is always a buy, right? So we'll look at that and what happened. So beautifully, you can see now on your screen, above OP, above pivot 1, where are the entries? This is the one. The first entry is here. Above OP, above pivot 1, first entry. Above OP, above pivot 1, second entry, and third entry. So that's the reason why a lot of people, I mean, 2 trading days ago, when the market has above OP and above pivot 1, people don't believe it. And of course, it was not like outright sure win trading. There was some trade that lose, and after that they're winning. I keep on repeating this to people. I say that you have to believe it and you continue following through. You must have follow through, which means that if the rule says that above OP, above pivot 1 is a buy, you just have to follow and believe it. And of course, if you really did it, you would have bought here and you would have bought here. Okay, there was a big shot up in gold price, but when the when the 15-minute chart and finish, right, it actually closes somewhere here. So if you enter here, this is your stop loss range, still within acceptable range, right? So that's why after that the gold price also go up. So you make back your money 1 times your profit easily, because here to here to here to here is 1 time, right? Yeah, indeed. So you will make back your money. And you make back, not only that, you make back 1 full time. Whatever you risk yourself, you get back 100% back. So that's why I said that trading with the TWB system will cut away all those stuff that you will think, oh, this is like overshot. Oh, the market is coming down, reversal hammer and stuff. No, no, no. Look at it. The KSI is green. There were no blue bars at the bottom. This is a buy. If what is above OP, is above pivot 1, it is a buy. So you just have to concentrate on this type of things and you make money from that. Rather than you asking me, it's all right, is this at too high and should we short the market and all this thing, right? Why don't you just follow through the market? It will be a better option. Okay, got it? All right, for those who are online with me, I know it's very early to do this, but it's like 11 of you. If you understand what I just say on the gold market, please key number 1 right now. Please key number 1 right now. Yeah, of course, you can give me some like button, love button, it'd be absolutely brilliant, okay? Okay, all right, thank you very much. I'm Michael, Alex, Ching-Hui. Wow, okay, good morning to you. Okay, all right, let's go. All right, so today, because of lack of time, I can have time to just, I can't do the editing for you, so I can just put it a bit, I'm just gonna draw some key points and then just show it to you, okay, some of the important stuff for today. Thank you, Hoseng and Iman, all right? Now, on the Bloomberg side, I spotted 3 main things that I think we need to quickly just tap on it and talk about it. We talk about Dr. Fauci cited that the possible delay for the Moderna booster. Singapore Binance to halt Singapore products after central banks warning. Our central bank warned, and of course Chinese finance regulators vow tighter supervision rules. Okay, I talk about these 3 topics for today. Okay, so first of all, the first thing is the COVID cases around the whole world right now. Wow, look at it, it's really incredible. In just US alone, we're talking about in a single day, 56,000 cases in a single day. That's really incredible. We're talking about in total now there are about 5.4 million vaccine doses administered in 183 countries. So you mentioned that that's how bad this COVID has hit so many countries. And of course, the stock market is still running up very well despite the COVID cases. And you can see that now that people were asking themselves whether this COVID, should we have another booster shot? So apparently, right, the Dr. Fauci says that maybe we should just wait for a while, although there will be one, but it's better to wait for a while and get more update on the virus and see whether that we can really enhance it to make it better before we actually administrate onto people. So that was what Dr. Fauci says. All right, the second news is Singapore, the Binance side. All right, that's the Binance side. So cryptocurrency Binance says that they will stop offering some products, example P2P, for regulator in Singapore. In Singapore, after regulator says that they have to breach the Country Payment Service Act, which is actually very true. All right, peer-to-peer trades and stuff like that. So the thing is this, Binance says that right, they are all ready to assist regulator and make sure I find a better way to solve this problem. And of course, because of that itself, right, some of the transfer and stuff like that is not really available. So if you know more about this, you can go online and check it out. What Binance do. Now, do understand, it's not that Binance is doing anything wrong. It's just that certain part of their products is not accepted in Singapore. So just don't need to panic. If you need to find out more, go online. Or if not, just go to the relevant website to check whether how can you go around it. Okay. And of course, this is the Chinese finance regulators. Now, apparently, right, we all know that the CSI, which is China Shanghai Index, dropped by 16% from the recent February high. And of course, big giants like Alibaba, Tencent, they all got hit because of the regulators, right, proposed that all companies to seek in foreign countries to undergo a cyber security review. And it is to really, to monitor the finance movement, the overseas movement, and the foreign investment injection to companies. So of course, we have the surprise crackdown on the private tutoring to internet platforms. All right. So now the banking regulator is trying to focus on the preventing risk from foreign institution malicious cross-border capital movement. So it's trying to say that, right, the Chinese government trying to make sure that all these companies are not tools and assets being utilized by this foreign institution to do this cross-border capital movement. Because from there itself, right, you can actually extract the funds from China to go out. So that's why a lot of funds are moving out. Okay, because when these foreign companies when they have these technology companies, a lot of foreign investors comes in, then they lose a lot of things on there, and it became a pipeline for funds to actually exit from China itself to outside China. And that is why Chinese government got a bit upset, because we all know that China, they control the finance, the money, the assets in China very well. So now when you actually come out with something like this, it actually gives a very big loophole for the funds to exit China. So that is why by now you understand why China step in to stop all this thing here. This is what you're seeing right now. Okay, a lot of very politic stuff ongoing. Okay, so that will be the local and global news. Let's look into the important market information for references today. Okay, so let me just quick one here. Okay, I'll take this one out first. Okay, moment. Okay. All right. So first of all, we know that the disappointing August job report shows that the federal taper is going to slow down, and that increasing the twin fear for the economy. So what are the twin fear? You can see that the data shows that since April, it was down by 20.7 million jobs. And after that, we tried to recover bit by bit. But you notice that we add in all together itself, right? It's nowhere near to April's job loss. Okay. So the thing is this, the biggest culprit for the losses was the leisure and hospitality that was flat. Okay. All right. So main thing is this is a sector that created the drop in the non-farm payroll data. All right. So that is one. Then of course, although the poor market data came in, right, but the market did not also surprise. The market seemed to be actually expecting this to happen. And of course, now there are also analysis saying that we should now focus on the strong profits from the companies and not focus on the jobs. So people who are more bullish, they're saying that, right, yeah, we should look forward to the the earnings. Now, do note today is a holiday for US too. Do note once again, it's actually a Labor Day. So do take note of that for today. The market is kind of going slow, okay? It's a Labor Day effect, so think about it, okay? Then of course, some of the people who are much more bearish, they are saying that the froth in the stock market makes impending correction looks almost obvious, all right? So there are some people who say that the market is now at an all-time high, and this guy, Myla Tabak, okay, Chief Market Strategist, and Matt Marley says that there is a chance of the market dipping at the top, and there could be some form of profit taking. And he says that there's a red flag seemingly what happened in 1999 to year 2000 and 2007 to 2008. I think that this two period was what I shared with you before. And I think that we do have some similar movement over there. So traders, you need to watch out for that, because this is like, look at it, this is the period to period movement itself. Okay, the 200-week moving average. Wow. Okay, so from 2017 all the way, it seems that every time when the market hit by about 47 to 48%, there was a pullback. But of course, this time now we are more than 47%. So it's kind of not that accurate, but at least you know that we are way above normal. All right. And of course, stagflation is the one that I told you there's the biggest worry. I don't think that's only happening in Europe. I believe it also will be happening in US. But of course, we know that in Europe already is happening, because the earnings are not improving as what you can see in US. But the cost of living has went up quite a fair bit. All right, the cost of living has went up quite a bit. And former Italian Prime Minister Mario Monti says that this is going to be a big problem, and the word that he used is stagflation, which I totally agree with you, because you can see that the IHS market Eurozone Flash Composite Purchasing in Money Managers Index, okay, hits a 2-month low to 59.5 versus 60.2. So although above 50 is still expansion, but they are looking at the numbers to is dropping, and this is not what they are expecting. Okay, and Goldman Sachs felt that that crude oil will go up and hit $80, which I totally agree with this, and I think that traders should be watching this very, very closely. Yeah, indeed. And last but not least itself, this guy called Now Ferguson. Okay, this guy is saying that the inflation in America could repeat the 1960 movement. Now, I was not born back then, but according to this economic historian, he says that in 1960s there was a very big inflation, and of course that created a lot of problem. And the numbers now seem to be showing, and he believes that whatever Federal Reserve says is transitory, is not going to be accepted by him. He said that he thinks that we have stretched long enough, and he believes that this is going to create more inflation in the market, which we kind of true on this. So these are the market data that we can share with you today. Apology again, I didn't have time to extract everything out for you. Hope that by looking at this, you roughly know that these are the main things that I want to share with you today. Okay. All right. So I think that will cover all the data, market and stuff. Let's look at the charts right now. So let's study the charts for today. The bull goes moo, the bear goes green, and the lemmings go is different this time. All right, let's go to the chart right now. Now, because it's too early to see China A50 and stuff like that, so I cannot do anything, but I can give you the key technical level for today. All right, let's put it in for you. So here we go. Here we have the MA30. Okay, so the MLP for today, for the China A50, I'll write down for you. Okay, it will be somewhere around here at 15,128. That will be the MLP for China A50. The MA30 itself, will be somewhere around here, but this is not the most accurate, because you need to have the opening price together to create the MA30. So this is not the best, but because I am not around by then, so I just give you the rough figure first, and this is the MA30. It's 15,225 for the China A50. Now do note, China on Friday is a BMB. It's a BMB. So which means that the market will take the high and the low as a reference point to either continue upsurge or it may pull back. So watch out for the high and the low for this China A50. Now, if you look at China A50, you can see that over the this period of time, when it hit the MA30, it couldn't go higher, It went past it, but it closed below, and that causes the market to fall. So now we saw that last 2 days, the market did try the MA30. Then if the market is strong enough, it may push it up and break the downtrend. But if the market failed to go above the MA30, then we're supposed to see a lower level again. Okay, we're supposed to see a lower level again. So it all depends on the regulation and also whether or not the market has bottomed out. So we watch out for this, traders. You need to watch the screen closer, okay? All right, the Hang Seng is very clear. Hang Seng A50, you can see that. We talked about this, remember? I said that there will be a very strong support on Hang Seng around 25,835. And you look at the 5-minute chart, you can see very clearly that this is why we want you to concentrate on the market. You can see beautifully that the Hang Seng came down. Once it hit the MA30, it rebounded, came down again, rebounded, came down again, rebounded. So every time the market hit the MA30, every time the market actually rebound. So that's the reason why this MA30 is so powerful, and it should be remembered, okay, for us. Okay, so for Hang Seng today, you can see that again, we got the opening price of this morning. The reliance is that we have the same number around there. So the MA30 for Hang Seng today will be 25,000. 835. Okay, that will be the MA30 level for Hang Seng. The MLP will be somewhere around here, and that's about 25,945 for the Hang Seng MLP. All right, so as long as the market stays above MLP and above MA30, there will be further upside. But if the market loses MLP and also loses 25,835, then I suspect that there'll be some profit taking on Hang Seng today. Okay, so very clear numbers to be watched out for, and you just have to follow through. Okay, so that's Hang Seng. Let's look at the US Dow Jones to start it off. Okay, now this morning the Dow Jones is trading now below the MLP. Now the MLP for the Dow today is somewhere around here, and that is 35,413. Okay, so write down for you. The MLP will be 35,413. Now the MA30, which is now where we are, around the same level at 35,301. Now guys, you look at it, right? We talk about this figure, 35,301. That is an MA30 on last Friday. And of course, you can see beautifully, as I said earlier during the recap, you can see that the Dow Jones beautifully came all the way, crashed down, hit the 35,301 mark, and then after that, very strongly rebounded. So that tells you that the power of knowing the MA30 is very, very crucial. Very, very crucial. So now, what we are seeing on the screen right now is the same thing. Today, we need to watch out for is MA30 at 35,301 at same level. So as long as the Dow Jones stays above 35,301, it should be kind of positive. I'll write down for you right now. Just put it in. Dow MLP estimate is about 35,413. MA30 estimate is about 35,301. Okay, so if the market right now, what you're seeing is that it has stabilized beautifully at the MA30. Yeah, I'm going to make this chart a bit bigger. You can see that the market hits the MA30, rebounded, hits the MA30, rebounded. So administratively, if the market comes back down to this point here, it should be resisted. Okay, it should be supported, sorry. And then the market will not go down. But if the market really goes below it, okay, then we should see some selling. And this selling will bring the Dow Jones down to 35,056 level, because this is the BMB 1x1 minus 1x1. Okay, I mean, if the market breaks below the BMB SL, then the downside will be minus 1x1, and that will bring the Dow Jones down to 35,056 level. Okay, all right, so about 300 points. If the market really come down to this point on profit taking, I think it's a good buy. You should consider the buyback of position, and then maybe you can buy for upside from there. That's if let's say the Dow Jones stays above this figure, 35,056. Okay, all right. The weekly chart right now, I told you before, okay, it's really happening. Everybody take a look. I told you that this week will be the very important week to watch out for, and really incredible. The chart looks quite bad. It looks like a sell soon, because you look at it, right? You see this, everybody? Right, this is the intersection between the long-term trend line and the short-term trend line. And by charting view, the market opens outside the premises of my two trend line, and this is pretty negative. So if that is the case itself, right, with the squeezing in of the candles towards this particular intersection, and if the market open this way, there is a fairly good chance that the Dow Jones may pull back a bit. So that's why if the Dow Jones fail to recover above the intersection point, which is somewhere around here, let me see, it's somewhere, well, let me just confirm this one. The intersection point will be somewhere around here, and that's for 35,500 level. So in short, it's as long as the Dow Jones cannot stay above 35,500 level, right? There is a very good possibility 35,500 is the intersection point. if the market cannot stay above 35,500, then there is really a fairly good chance that the Dow may pull back. Now the Dow has been higher low recently. So the last time this low is about 34,500. So if you look at it, it increased every time, right? So maybe this time around, the Dow Jones, even if pull back, it may be kind of limited to around here. So that number is about 34,000, 4,850 lah. So which means that if the weekly chart is to show, give you an indication of the downside, then I believe that 34,850 should be a fair number for the Dow to come down to. Okay, a fair number. Okay, all right. So let's look at the Dow Jones quickly right now. Okay, this is Dow Jones chart. You can see the Dow Jones chart today, the KSI is red in color. And this is like a zebra, red, yellow, red, yellow. Now, yes, the day before was CCRY was a buy, but now again the market flipped back down, become a sell right now, CCYR. So the thing is this, we are pretty near to pivot 2. So if the market loses pivot 2, we should see some selling, and this could bring the market down because the KSI is red. And also it's a zebra formation. So this high and the low will be used as a form of a guidance. So if the market breaks here, we should see the Dow coming down to somewhere around this area. All right. Okay. So traders, you can do your mathematics. Just a quick one right now. Rough estimate. Rough estimate that this range is about 300 points. So 300 points drop will give you somewhere around here. Yeah, indeed, about 34,924 level. Around there. Okay. Around there. All right, so traders, watch out for that. Okay, because of time limit, because I need to step out very soon, I will not do the NASDAQ and the S&P today. I will straight away do the next one that everybody liked, where will be on the gold market, to just give you a wrap it up for this morning. I apologize on that. Okay. Okay, so for gold market right now, you can see that the gold has really, it has stabilized above my Fibonacci at 1762. And now it's moving upwards, as you can see. You can see pretty clear that it's heavily supported around this area. And once it starts to explode upwards, right? You can see that it shoot up all the way from this point here. Now it's stabilizing. So very good chance that this gold should be heading towards this point. It's 1836 level. So I believe that very soon the gold will be going towards 1836. And if it goes further, if you look at it on the major trend line, we can see this. Slow down the chart for you. You see that this is a major trend line, and I believe that you'll be going towards here. So the major trend line is about 1850 range, 1850 range. Okay, so to put it all together, if gold can stabilize above OP today, and especially can stabilize 1829, because 1829 is PTP technique. If gold can stay above 1829 today, it will move towards 1836. And if it can move to 1836 and stays above it, then the number will be 1850. Now do note there's a KCB level at 1859. That is the level that we've been saying. So 1829 first resistance, cross 1836. Okay, will be the level to watch out. It's a Fibonacci level, and then after that 1850, the intersection point, and the KCB is 1859. Now last week I did mention there's a very important number at 1833 to watch out for, right? Remember, I did say that gold has a very interesting level to watch out for at 1833, and it was really spot on because the high on last Friday was 1833 beautifully. 1833 was a touch and come down, right? It's incredible. It really happened. So how do you know that the level is there? Because if you move back your mouse, you will notice that the high here itself was 1833 on the 15th of July. That was the high. And apparently, I just feel that it will go there to touch base, and indeed, it really goes. So traders, for today, 1829 level is a very important level. If it cross through 1836 will be the next level. Okay. All right. Then of course the weekly chart already showed itself explosive upside. All right, the week before it crosses it, then the last week it confirms it. Now it's seemingly going to test the one level, 1836 level. That's a very important level. Okay, and of course it has also the last Friday movement effectively have crossed above the MLP of this black candle. Now the last few times the weekly chart shows that whenever the market hit the MLP, it couldn't go higher. But last week's closing price confirms it. So if you want to tell me that if there's going to be any weakness, right, then on a chart view, then the gold cannot lose 1820. 1820 now has become the resistance turn support level. This is the resistance, you can see that. This is the support. So 1820 becomes the resistance turn support level. So 1820 will be the support level for gold. Okay. All right. Then if you look at the gold chart, sorry, this is weekly for today. Now for the gold chart today, you can see that there's KSI green, no blue bars at the bottom, so it's very, very bullish. The opening price is between the pivot 1 and pivot 2, but it's near pivot 2. So even though later on there could be a chance for the gold price to fall below pivot 2, but because the KSI is green in color, there's no blue bar, the downside will be between -1 to -2 on the KTR. All right, although we all know that below OP, below pivot 2 is a sell, we all know that, but we can sell, but do take note that KTR -1, do consider take some profit. But if the market actually goes down below pivot 2 and recover, this is going to be a very strong buy. I repeat, if the market hit the pivot 2 and recover with a CCRY, this is going to be a very strong buy, and I believe that it will basically go up to test even 1850 today if the market actually go towards this momentum. So traders, watch out for CCRY above pivot 2 for today. Okay, of course it has to go above OP lah. I mean you don't need to go above OP, but if you can go, be better, because the OP and the pivot 2 happen to be very nearby each other. Okay, all right, but you don't need, if for just color change at pivot, you don't need to be above OP, but it will be better if above. Okay, so this is the thing to look out for. And on the one more extra side itself, I told you guys that silver price will be going higher. And you see Friday silver just shoot up from $23.90, went all the way to $24.60, $1, almost $1 movement on silver. And I told you silver will be going higher, and indeed it really, really happened. Later on, I'll text you guys regarding about this AIMS Gold Challenge. All right, I think it's a good time now to actually go for this Gold Challenge. And after that, we make some money out of it and also get the gold bar, right? The little gold bar. I think it's a good time to start to play gold, because I believe that gold should be going much higher in the next few months. Okay, there may be a pullback in between. If the equity market pull back, the gold price will pull back a bit. But once that stabilized, I believe the next 3 months, the gold price will still continue to go up. My personal take is that gold should go past $2,000 by end of this year. I believe that gold price should go higher, above the $2,000 mark by end of this year. This is my personal verdict. All right. So all I covered already today's market. Apology, I need to really rush. I hope that guys, you enjoyed this session. You know what to do for the Dow Jones and the gold market, so that you can benefit from this. All right. So that will be all for today. I will be busy today the entire day. I hope you enjoyed this session. I'll see you again tomorrow in our regular morning MAO. All right, this is Cal signing off. Have a great day. This is Cal. Bye-bye. Thank you, guys. Bye-bye.